Hey guys, we are talking about Alibaba stock and why I think they're a great buying opportunity for the long term. The company has been touted as the Chinese Amazon for the longest time, and the sentiment has not changed for me personally. I know when Chinese stocks are mentioned, you have talks about financial fraud and government intervention, and all this creates that Chinese discount in the stocks. And it's perfectly normal for investors to feel that way, but I'm a contrarian and I like to buy things when they don't look attractive. Alibaba is a quality company that's been hurt for reasons that have little to do with their business performing poorly, and is trading at a valuation that could be an opportunity that comes just once in a blue moon. So let's do a deep dive on the company and see if they're worth that price. And for those of you that are new here, I just started a Quest Trade portfolio and I'll be giving weekly updates through a video and also a Twitter account with buy and sell with recent alerts. And so you should definitely check that out and follow me through my investing journey. It'll be fun. And let's get into some stock analysis. At the end of Alibaba's 2021 fiscal year end, the company's ecosystem consists of over 1 billion global active users, 891 million in China, and 240 million internationally. And here we get a picture of the company's revenue contribution by segments. Their largest is their retail marketplace, accounting for 43%. You have Taobao, their online marketplace, pretty much like Amazon, and then commerce retail making up 23%. Sun Art Retail Group was a business that Alibaba acquired back in 2017 and now holds a majority stake. And at the end of the last year, the company operated 434 retail outlets, and the goal of this acquisition was to expand the company's physical footprint in China, digitize the service, thus creating an enhanced hybrid shopping experience. You then have a whole spread of services, including their cloud computing segment that is high margin in the nature of the business, their digital media and entertainment assets, and new seed businesses that Alibaba is testing to potentially strengthen their economic moat of activities. Taobao Live, for example, is a live streaming channel for influencers or store owners to showcase their products, and Taobao Grocery, of course, is their take on grocery pickup and delivery. So a whole variety in the company's ecosystem. They are not overexposed to one thing and have pledged to spend even more dollars to continue to innovate and expand their footprint. Like Amazon's vision to do everything, Alibaba is aiming to do the same, and in an economy that is booming and will continue to for a long time. So taking a look at the company's growth in the revenue segments, top-line revenue growth for every single segment is up for the year, and most are up substantially. One thing that I like especially is the growth in their cloud computing business, up 50%, now accounting for 9% of the company's total revenue. And also something that I'm going to pay attention to in these next few quarters and years moving forward is the adjusted EBITDA performance of the innovation and unallocated segment here. As a number of Chinese firms have stated that they plan to go all out with investments, with Alibaba included, this will continue to put pressure on their margins. But as I mentioned before, with all their special projects and entries into new business environments, I don't expect them to be profitable in the short term. And Alibaba investors should watch closely as to how the company maneuvers around this new competitive environment. But I have full confidence in this company, knowing that they will understand which initiatives they need to keep and which ones to drop. So let's talk a little more about this Chinese tech crackdown that's been happening. If we look at the Invesco China Technology ETF and compare that to their American counterparts, the QQQ has been the outperformer this year and in the last 5 years. This, of course, has to do with the anti-competitive practices of over 30 firms that China has investigated. This, along with a long history of accounting fraud in Chinese companies like Luckin Coffee, was what ultimately created the uncertainty around these companies. And so do we buy low here? I'm going to say yes for the following reasons. American companies like Amazon and Facebook have done pretty similar things when it comes to these anti-competitive practices. Back in July 2020, Zuckerberg and Bezos both testified before Congress, and Amazon was accused of undercutting their own sellers in their marketplace. sellers would sell their products on Amazon, and Amazon would then copy these products, put them at a lower price, and then the users' listings would then suddenly disappear, but somehow these American companies get away with it. And second, Chinese tech giants like Alibaba and Tencent have spent too long building their brand and have too much to lose for accounting fraud. So I'm going to give them the benefit of the doubt here. And large funds like Vanguard and BlackRock all hold a significant portion of these stocks as well. And so there is safety in knowing that. And my last point, China is a huge country, it's growing super fast, and there is still this untapped market where these companies can grow and innovate, and all this leads me to wanting to own these stocks at a discount. Here I have revenue projections of Alibaba until 2027, and I'll quickly go over my thoughts and assumptions on what I did. For revenue, I have the company growing at a rate of 30%, which is incredible for a company this size, then slowly declining. I think this would be more on the conservative side though actually, just because the way Alibaba has grown over the years and them pledging to reinvest in these coming years tells me there is a lot of growth ahead for this company. And for expenses, they all ran up in 2021, especially G&A due to that $2.8 billion fine. But even without it, the company has been increasing their spending, and it's been mentioned by the company and many other Chinese firms, of course, that they plan to look for other avenues of growth in the post-crackdown environment. So product development and sales and marketing will also look to increase more than they have in the past. And so everything else you can pause and take a read. I don't think there's much you can do in estimating these line items. You just have to make the best assumptions that you can, because some of them are very specific to certain situations, like goodwill impairment, for example. And last, net income down here, it looks a little inflated, especially in the later years. And that's once again because there are going to be unusual line items that change this, but it's not something I can project right now. Finally, on the share price projections, we will focus on multiples of 15 to 25x, as this should be the range that BABA trades at right now and in the coming years. So BABA should be trading at around these levels in these boxes. We have a share price of $192 to $256, and I didn't mention anything above 20 times because investor sentiment is low for this stock and aren't willing to pay more at this moment. And for those of you that think Alibaba should be trading at around $300 already, I wouldn't disagree with you on that, but what I said is likely to be the case of why the stock isn't running higher. But fast forward into the future, we see that the company has the potential to easily double your investment. By 2025, I've projected a share price of $361 to $481, which is a substantial gain. At these price levels that we are seeing Alibaba right now, and if we are trading for just a slightly higher valuation, even just on par with American tech, it could go much higher. But of course, we know there are other factors into play, which all of it though, I am willing to risk on. And so last, despite operating in an increasingly competitive environment, I do believe that Alibaba is a quality company and still has a very bright future ahead of it. I've laid out the reasons why I want to own this stock. The company is a buy for me here, and if you're looking to start a position, I would definitely average in on this one to give yourself the most amount of flexibility and allow yourself to manage risk as well. And so thank you guys for listening. If you enjoyed this video, tell your investing friends to check out some of my research and analysis. I also have my portfolio now, so it's going to be a lot more fun and engaging with you guys. And so that is all. I'll see you next time.